podcast so they can like laugh at our jokes.
Boom room time. It's boom room time. Welcome, everybody, to episode 5 of the Arcanum Ventures Boom Room, where we discuss all things boom from separate rooms. Carmelo, how you doing today, man?
I am doing fantastically well, and that has nothing to do with the news and the markets right now. I think Bitcoin just hit 42,000, and ETH is at 2,200. So I don't know. It's weird to see the space come back to life so rapidly, and people are freaking out and already talking about meme coins and getting wrecked. And I don't know. Crypto summer might actually be here. Let's see.
Man. Well, we're going to dive into that. We're going to talk about prices. We're going to talk about some news. We're going to talk about some other really cool things. We've got some amazing guests on. We've got the CEO of Brickken, a tokenization platform focusing on real-world assets, and the CEO of Hacken, one of the industry leaders in smart contract auditing and much more. First and foremost, thank you everyone for tuning in. I see a bunch of hellos. The Rap, Ilmars, Cosmos, Headhunter, Sam, Yaroslav, thank you so much for tuning in, everybody. Carmelo, predictions for this one, man. What do we got going on? There's so much to cover today.
I predict that I'm going to be doing this the whole episode because I'm all jacked up on coffee today. I'm really excited for the episode. It's not just the coffee, but yeah, excited for our guest and for the excellent news about Bitcoin. And also, weirdly enough, Bitcoin and gold just hit all-time high. Gold. So maybe there's some link there between people not trusting traditional currencies and wanting to migrate to digital gold and real actual gold.
Well, I'm not a, let's say, technical analyst, but the last time I remember gold hitting an all-time high was in the early stages of COVID before a massive bull run. So maybe that's good news. But I've got Bitcoin prices up here, and this is what we'll start with. We'll go ahead and start talking about the price. You see this big number? I haven't seen that number in a while, man. This
kind of scared.
I know, right?
I don't know how to feel about it. But I do know that we've only done 5 episodes of the Boom Room, and like the bull market's kind of coming back. So maybe there's a link between Boom Room and bull market. We don't know.
You're welcome, crypto. You're very welcome. So we've got Bitcoin sustaining above 40K for the first time in a while, and we just have a staircase of what we originally thought was consolidation, but we've got a pretty big run up, and just leading up into today, I think. Perfect in time for the boom room. We've got a massive climb. I think that's like 6% on the entire Bitcoin price, right?
Yeah, I don't know. I think ETH might even be up more after the week. Not sure.
Ooh,
I've seen everybody so excited. I haven't even had time myself to check the charts, but it's pretty weirdly good timing to have the episode right now on the live stream.
Yeah, it's perfect. The only thing that's not performing well is Tether. Get your act together, guys. Jesus. So we've
just
got
barcoding.
We've got Ethereum breaking 2,200. This is good for our ETH bags. You guys know we are big Ethereum advocates as far as the level of decentralization, the powerhouse of a network, and the high gas fees. We love it. So yeah, we've got a big run up with this market. And again, just diving into the activity. I mean, we show this one all the time. And although it's not a great metric because you got to zoom in a little bit, you see this increase, this steady increase over the past couple of months here in the Ethereum daily transactions chart. So, again, we've got a good run up of more interest on this network. And I believe, TVL is jumping up too, right?
Yeah. And does this chart include layer 2s as well? Because if you compound that with all the layer 2 transactions, like that is probably a staggeringly high number. And, more signs is indicating that we are coming back to life a little bit. Crypto winter is thawing. Maybe it's crypto spring. I don't know about crypto summer yet, but what price do you think indicates that we're finally in crypto summer and people are going to be throwing money at the absolutely dumbest projects that we've ever seen?
Our viewers might really hate me for this, but when it comes to like Ethereum and Bitcoin prices as an indication of a bear market or bull market, like I don't really pay so much attention. As long as Ethereum is like, not going to let's say $500, I'm pretty happy. That means that this network is still around. Where I think I'm more so focused on what does Ethereum's run up and the potential bull market really mean for Web3 startup scene and cool projects that are coming to market. Like many of you guys know, we're all about the tech. We're all about the products. So, I mean, obviously, you know, our bags are happy, but I think like in the short term, that's not a big concern for us.
Shout out to the rap, most consistent member of our audience. Team Boring Blockchain. I think we're getting big enough where we have to start thinking about the name for our army, for our crew.
I think so, right? And so, you know, I guess just going back to TVL across all chains, not a whole lot happening here. Our boy Justin Sun really coming through on Tron, especially in Turkey. As you guys know, we're very bullish on Tron and overtaking the Turkish lira in that country. But yeah, I mean, you know, all green across the board. This is really, really good news. Very happy for the Boom Room, man. We really timed it well.
Yeah, I was thinking too, like how we're either dumb or really bold to have this live. Like it's such a commitment to do this live every week. Whatever.
Really
I guess we just aping into live streams.
Well, you know, I mean, we believe in ourselves, and that's all you really need sometimes. So in other news, let's go ahead and dive into the news. We've got FTX and Alameda Research cashing out close to $11 million to Binance, Coinbase, and Wintermute, a number of centralized exchanges. Carmelo, the interesting thing here is that, like, when it comes to flat figures, 11 million doesn't seem like that much in the grand scheme of things in FTX and Alameda. But, you know, diving a little bit deeper here, you can see, I think this is just like one instance of a sum of transactions that came over like $450 million, I think, of funds that were sent to centralized exchanges. It's kind of crazy.
Yeah, I mean, I think this is just one payment of many, and it's also another indicator that we're heating up because $11 million is a laughable afterthought right now. During the darkest dark of crypto winter, everybody was freaking out about any money that was lost, and now we're casually talking about, oh, $11 million was sent in one payment in the form of 8 currencies or cryptocurrencies. So interesting. Yeah. I think contagion was a real reason, one of the biggest reasons why we dipped so far this winter, this crypto winter, and all these little after effects, this domino ripple effect. So yeah, there's going to be a lot of cleaning up and reversing what happened the last 2 years as we start to heat up. So it's interesting to see these things. It's people aren't really paying much attention to. I think Genesis and Voyager are also cleaning up their mess. FTX is still cleaning up their mess, and they will continue to do so.
Absolutely. I think, you know, this is just, I think this FTX, let's say these settlements, these payments, whatever we continue to see coming from some of these defunct wallets will continue for a while. I hope that the industry happens to reverse a lot of what happened, hopefully, you know, close to a full reversal. We can only hope. In other news, so Bankless is facing a lot of controversy, and specifically around their Bankless DAO. And so if you guys are unfamiliar with Bankless and Bankless DAO, it's you know, everyone knows the media company Bankless when it comes to the cryptocurrency industry. But there is a DAO that was launched as part of, I'd say, their branding, and that's where the real controversy comes from. Carmelo, what do you know about this one?
Yes, our bitter rivals over at Bankless. We're neck and neck with them. And yeah, I saw there was actually I was part of the FUD. I'm not going to lie. I saw on Twitter a few weeks ago that Bankless DAO they requested for a few $1 million in Arbitrum tokens as part of their structure to feature in media and content and support as a community. But obviously, there's some misconceptions there about the separation between Bankless DAO and Bankless. So there's been some. I think the two guys from Bankless, they were vigorously defending themselves, and you know, they brought up a lot of good points. They weren't behind this request for tokens. They said these brands are completely different, but they did admit that yeah, it is a little confusing, and maybe they should have branded it differently so there's no confusion about it. But it goes back to an interesting conversation, and they made a few good points. Okay, if you're a media company, you deserve to make money. You can't do this for free. You can't feed yourself, your family, with good vibes. So it brings a lot of attention to how you're supposed to make money in this space and do so in a transparent way, in a fair way, in an equitable way. So that's something that we always talk about. We want to be as transparent as possible. And, you should always disclose what you're invested in, how you're making your money, if you've been paid for a media appearance, for a speaking arrangement, for a video, for a live stream, anything. So I think it's fair game. Like, these guys work hard to create good content. I don't think we should penalize them for asking for money, but maybe it was a little bit much, a little bit much of an ask from the DAO, which I'm not even sure what the Bengals DAO actually does.
I'm not too sure either. And I guess it's kind of, it is kind of like this catch-22. I know Ryan and David they've been very, very good about transparent disclosures for the companies that they work with, the advertising deals that they have, the promotional contracts, etc. Nobody's perfect. I'm sure maybe something slipped through the cracks, but comparing them to a lot of people in this space, specifically influencers, they're like far, far ahead when it comes to transparency. I think one of the biggest concerns here was that a lot of DAO members had assumed because it was branded under the same umbrella that would kind of allow them to leverage the clout of the brand in, let's say, receiving grants or having exposure to investment opportunities, which is what Ryan and David are saying they don't want to happen now. So I think that's where a lot of these DAO members might be pissed off. They bought into something thinking that they would maybe leverage their media company or brand to shill what's behind the Bankless DAO, especially considering they were members and token holders. But I think their action now is that they want to burn all of their token holdings, right, and just completely distance themselves.
Yeah, so like that's why I respect them most of all. Like, they're very transparent and they admit when they're wrong. Like, I think one of them apologized for being so aggressively defensive about it, but they obviously had every right to be. But they wanted to call a vote in the DAO with their tokens, the last use for their tokens, and they're gonna call it to separate the brands, I guess, and then they're gonna burn their tokens to exit that ecosystem and let them operate as they will. They don't want to be involved, which is fair. They want to just run their own company and let Bankless DAO do its own thing. I don't know how involved they are with it currently or how much they will continue to be with it, but or I'm not sure what Bankless DAO does still. So I guess I got to read up on that as well.
I'm not really sure. Maybe it's a cool DAO to hop into, especially after that DAO conversation that we had with Dr. Nick. In other news about transparency, Bitcoin miner Antpool to refund that record $3 million transaction fee that we talked about in the last boom room. That was crazy. So if any of you listeners do remember or don't remember, there was a record-breaking Bitcoin transaction fee that was sent to one of the miners, specifically Antpool. And the reason that happened, I think it was Richard Hart had a pretty good write-up on crypto Twitter talking about when you create a new Bitcoin wallet, the first transaction will have some sort of like residual Bitcoin that you need to send back to, you need to manually sign and send back to the miner. And so if you don't like specifically put in some amount, it'll drain your entire wallet. So I guess $3 million was sent back to Antpool, or sent to Antpool, but he or the organization will be refunding this Bitcoin, which is fantastic news, really, on a very bright note.
I was actually going to ask you that, like, you could go either way. Is it good news that they did the right thing and this poor soul got $3 million back? Or is it weird that it's pretty centralized, Is that a good thing that they can reverse transactions? Like, what does that mean for Bitcoin? Obviously, we've spoken about this at length before, about the degree of centralization in Bitcoin and how much control this mining syndicate has over Bitcoin. So it's good. It's good when it's good, but it kind of worries me in the future about like how you can censor or restrict transactions, maybe if you have total control over mining.
I'm not so sure if that was, I guess it's a completely valid concern, but as many people know, Antpool is one of the largest mining organizations out there on the network. And so I would be like way more concerned if they decided, no, we're keeping this, tough luck.
Yeah, that's true.
I think that's, they really need to play PR here because, they're like a behemoth, almost like an oligarchy. And then they just keep whatever Bitcoin comes their way as a matter of a mistake. Like, they most likely don't need that money with all the negative PR that comes with it. So I think it's a good move from them.
No, I'm not suggesting they should have kept it. Just that it freaks me out a little bit. Like, I'm sure the original view or the original vision for Bitcoin was small node operators around the world, a total decentralized net, not maybe 7 mining pools dominating everything. But I guess that's just the nature of it. And we're only going to get more centralized, I think, in the next few years while all these ETFs in January are supposed to kick off.
Well, I mean, I guess that was the vision, but we all know how that turned out. Yeah, I don't know. Like it's a tough one. We'll see. But, going back to some old news again, we've got Blast Network. This is an article we showed last week, actually, when they hit 400 million in TVL, which blew our minds. So for all of you Arcanum Ventures viewers, we've got a very exciting on-chain analytics data video coming out shortly around Blast Network and the multi-sig wallet that so many people are mistaking to be some sort of layer 2 network. So stay tuned. That's going to be coming up. But yeah, I think Carmelo, they just reach like $650 million today?
Yeah, I mean, I think 80,000 ETH was contributed as part of this TVL. So that has gone up in value, obviously, since ETH and Bitcoin are up significantly. So that's crazy. That $680 million is locked up in a multi-sig. And
oh my God.
A perfect question for one of our guests tonight. About security and about how you would feel about having $680 million in one multi-sig wallet.
Oh, I can't wait for that discussion. Sticking around old news. Last week we talked about the Kyber swap hack, and so there was some completely unhinged ransom note that came out. And I read this. I couldn't believe the demands on the Kyber swap foundation or team. Like, we're talking about one of the oldest protocols on the network. Carmelo, do you know what like some of the demands were in this letter?
If I recall correctly, it was total resignation from the board. He was going to buy out the treasury and, like, I don't know, send some money to people that hold tokens. And he wanted to be the CEO. And then he even signed off as I'm the president of Kyber Swap now. And you could find me on Telegram. I think I saw the Telegram handle, but I can't remember. But it's like Kyber Swap president. And I hate to laugh, like it's not funny, but it's
awful.
I've never seen a hack or an exploit like this. And I don't know. I thought that they sent the bounty already and that they returned some funds. So it looks like there was a reversal. I don't know what's going on, to be honest.
Well, so I thought they had. Yeah, I thought they had returned, like they asked for, or the foundation had asked for 90% of the funds back. They can keep 10% of the funds. And just consider themselves some sort of like white hat hacker. They ended up recovering 10% of the funds, apparently through some MEV bot that had, extracted this cash or this capital during the hack or the transaction. And so I guess that was kind of faulty, but they're saying now that the total's up to like $50 million after the dust is settled. One thing that's crazy is you think about like, all right, Kyber Networks, I would say the protocol's fully diluted valuation is like over $100 million. And so, by all intents and purposes, this hack drained maybe a portion of that. But then if you check this article out, I've got this interesting one here. Their TVL tanked close to 70% since the hack. So we're talking about a massive exodus from a platform that's lost a lot of confidence with its users. And so all of a sudden, the hacker requesting to be installed as the director, he wants complete control. Like that's not a pipe dream anymore. Like, he holds a lot of value of what exists for this protocol.
Yeah, I mean, we spoke about it though. Like he had an out to make $5 million and not be a criminal, and he chose criminal route. And I thought you were going to say that they got 10% back because he said 10% back, and he was like, "Here's your bounty. I ain't taking 90% because I am the director of Kyber Swap now." And it kind of reminded me of that old Jetsons intro where, the guy gives his wife $10 and then she takes his whole wallet and leaves him with $10. Like, that's what I was thinking of when that happened. That was a throwback. By the way.
You hate to see it. I mean, Kyber Swap's a fantastic network. It's been around for a long time. So this is going to be interesting development to like keep an eye on. I hope they can get this solved. I
mean, Kyber is still alive. This is just Kyber Swap, but obviously a major part of that ecosystem. I think the DEX is usually the first thing to exist in any blockchain. It's the first use case for any blockchain. Like, you need somewhere to swap assets.
Absolutely.
So
pivoting into I hope so. Pivoting into some regulation, we've got some interesting news coming from the block talking about U.S. lawmakers trying to push through crypto regulations before the end of the year. And, Carmelo, you're very familiar with U.S. politics. I'm sure you know what that means, like trying to push things through in like some aggregate bill and sneak them through. Like there's very, very little quality and lots of quantity there, I think, right?
No, I don't know anything about politics.
So...
No, I think, yeah, they're trying to sneak in as much. I've been monitoring this, and there's been some friendly constituents on both sides, or not constituents, lawmakers, more so on the GOP side. Anybody familiar with U.S. politics, this is like the right-leaning Republican side. They tend to be more friendly towards the crypto space, more libertarian in their approach to finances, whereas the left, for whatever reason, is cracking down, appointing Gary Gensler. Elizabeth Warren is a senator that supposedly has a anti-crypto army, whatever that means, which is horrible. Like, why would you pick on any industry that much and literally delegate your own army to take down an industry? I understand crypto gets a bad rap. It's full of a lot of not the nicest people, but most people in crypto mean well. They want to make money. They want to be a part of a growing industry. It's like a gold rush in some ways. So it's sad to see them cracking down. And, this is only going to get more interesting in the next year as the run-up of the presidential election, November 2024. So it's going to get more and more of a heated topic. And I'm looking forward to seeing crypto be one of the major stories in the election, because whoever adopts this is going to have a huge surge behind them in support. I know there's a lot of people in the U.S. that are fed up and tired of feeling like criminals in their own country for liking and supporting blockchain technology.
Absolutely. And then what the technology means for other industries. And we're going to talk a lot about real world asset tokenization. And so we've seen a clear trend where there are a lot of other countries that are adopting legislation. They're adopting these certain types of corporate structures that allow this, whereas the US is falling way behind. And so, this is going to be very, very interesting to see in the next election cycle. I hope, we are able to bring somebody on that is more sympathetic. If you take a look at some of the language they're using here, I see Cody Carbone, the vice president of the policy for Chamber of Digital Commerce, said that he wants to create something that the crypto industry can accept. Not a lot of context on what that is, especially when you're trying to rush some bills through before the end of the year. But he is comparing it to bills that have come from Senator Elizabeth Warren that are trying to crack down blanket-wise on the entire industry. So can you imagine if, like, even tobacco industry, if there was some sort of anti-tobacco industry collective in politics, that still feels really weird, even though many people can agree, like, tobacco is largely unhealthy.
I mean, there might be. They're just PACs or super PACs, but I guess there's lobbyists for every industry, and there's anti-lobbyists. There's people that want to take down, let's say, like the oil industry that are environmentalists. So I don't know why there's an anti-crypto industry. A lot of the stuff they throw around is flat out inaccurate. I saw Elizabeth Warren talking about how all the money being piped to Hamas in Israel right now and Palestine is coming through crypto, and they already dispelled this rumor that actually most of it's coming through bank wires and cash and laundering. I mean, some of it's coming through crypto, but just like anything else, cell phones, knives, guns, cars, they can all be used in crime. It doesn't mean they're criminal tools. Most people use these for regular use cases. I drive to work. It doesn't mean it's a weapon. Car can be a weapon. Crypto can be used to fund cartels or violence, but it doesn't make it a criminal industry.
You're using a lot of big words. You got to tone it down, man. You're going to get us canceled.
That was a reasonable take.
It was a very reasonable take. I agree with it completely. It's just, these are very difficult things to try and figure out. But yeah, I mean, things are heating up and they're happening very quickly. Speaking of heating up in politics, we've got Nayib Bukele stepping down as El Salvador's president ahead of his re-election bid. And this is big news because he was the first person in any country to legally recognize Bitcoin as legal tender, I suppose. So yeah, I mean, it's interesting to see him stepping down now.
I think this is actually not as big a story as I thought initially. He's just stepping down, which is something you don't see in U.S. politics, actually, and I'm sure most places, but he's stepping down just to go campaign for his re-election. So he does plan on staying in power. And since the murder rate is down, which was one of the biggest things he ran on, I think he will probably get reelected. But from now until June, he's going to be campaigning around the country and not actively leading the country. So it's a little bit of a non-story. We'll see
Yeah.
if he gets reelected. If he doesn't, it means that the people, there's a mandate, an anti-Bitcoin mandate. Maybe people are not so excited about this move to making Bitcoin legally accepted tender. They're forced to accept it. So we don't know what the implications are for that decision a few years ago.
Yeah, I mean, it's going to be it's got to be heated, and considering like he created so many bear market victims, but maybe it's good timing for him considering Bitcoin just pumped today.
Yeah, and yeah, he's campaigning on that, and I think you and I were talking about it maybe last week, but one of the other movers, or at least we're speculating, one of the movers behind Bitcoin surging is the election of the new president in Argentina, which is also
Yep.
very pro Bitcoin, total libertarian, wants to do away with the central bank. So people are really excited in South America for a kind of pivot in the new direction away from what hasn't been working, what's led to rampant inflation. So I'm curious to see what happens there. I think the guy's a little bit eccentric, let's say, but I'm willing to give him the benefit of the doubt. Maybe he leads Argentina back into a golden age. That'd be nice to see for all my Argentinian friends.
Yeah. Eccentric is a kind word. Let's be honest. Speaking of eccentric, we've got news on Cristiano Ronaldo. You like that transition, by the way? Just killing.
Yeah, I was gonna say before that dope transition, we see a lot of people clamoring for Dima and Brickken and High, and we're gonna get to that in a few short minutes. So don't lose your minds. A little bit more news. Like and subscribe and join us. Join the Arcanum Army if you haven't already, and we'll be getting to our amazing guest shortly.
Tension's coming. But before we do, just want to talk about this. I thought this was hilarious. So Cristiano Ronaldo facing a $1 billion class action lawsuit. There is a resident of California claiming that Cristiano Ronaldo had leveraged his network, his social media clout, etc., to offer and sell unregistered securities in coordination with Binance. This is a normal resident from California that has filed a lawsuit in the state of Florida. Carmelo, why is this significant?
I think it comes on the heels of like last week or 2 weeks ago news for Binance. Obviously CZ stepped down as CEO, the founder of Binance, and Binance paid a $4.3 billion fee to the U.S. government. I think CZ paid another $45 million out of his own pocket. And then I think there's blood in the water. So people are like, yeah, down with Binance and anything associated with Binance. So let's go after their biggest influencers. And, I don't even know if Ronaldo has $1 billion. Maybe he does, but that seems like a little bit of scapegoating. Like, I think Michael Sizemore should be a little bit more careful with his investments and not blame other people. I don't think Binance is responsible for your bad investments or trading. Obviously, we got to educate ourselves and not listen to influencers. This is something we always advocate for. We're vocal about not just aping into things without understanding what you're investing in, whether that's traditional finance or crypto. It doesn't matter. Don't give somebody off the street money for their business idea if you don't know them and you know anything about what they want to build. Same goes for crypto. Same goes for Binance. Whatever's listed on Binance. We've seen Binance list joke meme coins before. They obviously don't care as long as there's volume there. So don't just trust something because it's on Binance, people, please.
Absolutely. And I don't know what's going to happen here. Probably will be dismissed. This is kind of absurd when you think about the lump sum that they're suing for, but it does set a precedence. And if someone like Cristiano Ronaldo can be sued for, let's say, shilling securities, unregulated assets, then what can happen to someone like Ben.eth? So I think this is something important to keep in mind.
Yeah, I mean, this is nothing new too. Like when FTX went down, people were looking at Steph Curry, who's one of the best NBA players in the world, and Tom Brady, one of the best football players ever. Both represented FTX along with Matt Damon, Larry David, a bunch of celebrities that I don't know if it's a case of their business managers were like, hey, do you want to make $6 million for a commercial? And they had no idea what they were representing, but they're like, sure. And maybe that's what Ronaldo, I can imagine Ronaldo just sitting on his couch on his phone and his manager, somebody wanted to make money off him, was like, hey, do you want an NFT collection? And he was like, why not? If it's going to make me money, let's do it. And then now he's in hot water. And And now he's like, why did I make this NFT collection? I already had so much money.
Poor Ronaldo.
Poor Ronaldo. Poor guy.
Well, yeah, poor Ronaldo. Well, that's all we got for news this week. We're going to go ahead and bring on our first guest today in the Boom Room, episode 5. We're talking about some very exciting things that are buzzing all over crypto, but not only in crypto, outside of crypto as well. We're talking about real world asset tokenization. And with that being said, we'd like to introduce our first guest, the CEO and founder of Brickken, a real estate, I'm jumping ahead, I think, a real world asset and business tokenization platform that had its roots in a very specific sector, I believe. So we'll go ahead and bring him on. Edwin, welcome. How are you?
Hey, what's up, guys? How's everything, Sasha Mello? Thanks for the invite. Happy to be here.
Yeah, thank you for
Very
joining
welcome.
us.
Yeah,
Yes.
it's been a little while. I think we go back quite a ways. I think we'd initially met in an accelerator program a long time ago, and I think since then we just kind of kept in touch, stayed friends, and kept up with what you guys have been doing.
Yeah, it definitely. We met through the InMind, kind of like we did something there, and then we just had a Telegram group, and then we just kept the conversation going. And yeah, now we have the news right on the Hacken tokenization, which is quite flashy for RWA space. So I'm super excited to talk about that alongside Dima, of course.
Very, very excited. But before we get into that, if you don't mind, for some of our users, let's give them a little bit of backstory. I remember when we first started speaking, Brickken, hence the name, was more so focused on real estate tokenization, which was still very, very early if you think about like this latest hype cycle around real world asset tokenization. But since then, you guys have made some very, very impressive and challenging moves, I think, more so specifically around the tokenization of existing businesses, both startup and large. So give us a little bit of context about how did this happen? This is a big change, I think.
Yeah, so I mean, we pivoted, right? So when we met a couple of years ago, we were thinking about real estate organization. That was like the most common term to use, kind of like explaining that a building you can break it down in 1,000 parts and everybody can collaborate. I mean, the market in itself is pretty much done. It's like just invest 100 euros into whatever, no? But on my side, I was always excited about the equity side of things, because when you want to tokenize real estate, you don't tokenize the building itself. You tokenize the structure behind it, which is the company. So the company, the shares of the company owning the asset, or the company signing the purchase of the asset. So it's kind of, I was thinking about it, and it's like, in reality, you can tokenize absolutely everything. So instead of focusing on real estate, why don't you go and say like, well, you can tokenize companies. The equity can get transformed into tokens. The debts, loans can get transformed into tokens. Bonds can get transformed into tokens. So I think the nature of tokenization was never about a single asset. It was more about tokenizing the financial instruments behind the assets. So I went down the rabbit hole and never came back, basically. That was it.
It's a really big pivot in my mind, but it's really, really cool when you think about what it means for small businesses and what it could mean for the future of tokenizing businesses, of tokenizing really anything. And so I guess, the biggest challenge is that regulation will need to pick up. But before we dive a little bit deeper into that, I want to offer a question for you. I know there's been a number of, let's call them investment collectives, that have come to market over the past couple of years. So essentially, like low barrier of entry investment groups that people can, let's say, purchase an NFT and have exposure to what people in Web3 would consider, let's say, seed, pre-seed, or private sale deals. And one of the concerns that many people have brought into this is the idea of having this completely decentralized, anonymous set of investors all of a sudden that may not be able to bring any sort of added value that normal VCs or bigger investors would bring. And so when you think about real estate or any sort of real world asset or business tokenization, the way I kind of think about it is that you are selling your business to investors in another sort of fundraising round. And so with that being said, I want to ask you, regardless of the idea of who is buying these tokens, what have you seen in the industry behind the demand for something like this?
I think, you were explaining, do you have to do your due diligence, not put all your beans in the same bag? And I think with funding, it has to occur the same. I mean, there's added value, obviously, into a big logo VC. Nobody can negate that. But there's also added value in having retail investors. So I think the mechanisms of funding, it just got spread out. You shouldn't go full in on one because you can syndicate. I mean, syndication of business angels have a core in the past. So it's not like, okay, instead of putting 5 big tickets, now you put 1,000. What is the added value on that? That there's probably a certainty that you can transform investors into clients or clients into investors. So it's kind of like what we propose to people coming to us is we never go for 100% of a fundraising through crowdfunding because of what you said. It's like the mature way is you go through different forms and not the crowdfunding as an aggregator of added value, but not as your sole catalyzer for funding, because that will be
Mm.
what you said, too widespread, too much control. Certain decisions might not be coherent with the ethos of the company and whatnot. So it's all about just creating a structure that works for you and then shooting it. But even I'm not going against, but the tokenization of things, you can tokenize the equity for the shareholders of the BCs or for the business angel or whatnot, and you can tokenize the others part. So it's just one big combined building blocks.
Fantastic. So let me ask you, I guess, one other question around the tokenization of these assets, tokenizing equity. How is regulation fit into this for you? Because, you know, from our perspective in designing token economies, understanding or anticipating what's going to happen around regulations, there's a lot of uncertainty in what's happening depending on where corporations are registered.
Absolutely. So there was also a high degree of uncertainty because nobody knew what was happening. Like 2017, we were seeing about the first tokenizations, but everybody said like, no, you cannot do that. It's illegal. It's not that it was not illegal. It was just a very big gray area. The regulators didn't know. The people issuing those kind of securities didn't know. So it was all like trying to see where it fit. Now we're talking about 7 years later, 6 years later, almost seven, of course. Now we have a frameworks, and people are starting to understand that also there's a difference between private markets and public markets on chain. I mean, in securities, why startup funds through private markets, and then if they are big enough, they go for an IPO. They don't go for an IPO at the seed round. So it's kind of like the same method that we were doing. It also affects how you do it on chain. Just because you put something on chain, it's not public per se. You can block
Yeah.
it. You can say, I'm only allowing these investors on this jurisdiction who pass a KYC and they have all of this. So it's all about now that the knowledge is out there. Regulators are playing with it. Companies are more aware. They're more specialized. We're seeing also a tendency of specialization on the chain. Companies are not just with a bright idea. It's coming from Web2. Certain degree of know-how in financial capital markets regulation that are jumping in, and that's just feeding the frameworks of what is doable, how it is doable. So for us, the tokenization in Brickken, what we do is we deal with private markets, we secure that spot, and we're a tech provider. So it's the company who grabs the technology and decides where to shoot the issuance according to their whatever they want to be compliant with or regulated by. So that allows us to really just scale because we're just kind of like the Shopify of e-commerce with like the Shopify
Yeah.
of tokenization.
That's incredible. And I love this analogy of bringing Shopify into it. Like, you know exactly what you're selling. The goal is staying compliant, giving your investors, giving token holders what they want. And in a lot of cases, when it comes to real world asset tokenization, is being able to enter into investment opportunities for other industries that normally people would never consider because of these massive financial barriers. So I love this, really. This is a great,
Absolutely.
great thing that you guys are doing.
Edwin, real quick before we bring on our other guest, Dima, I wanted to ask, what is the strangest thing you've seen tokenized so far? Obviously, we started with NFTs first, and then I think real estate became the major narrative, and then now we're talking companies. So, you know, Sasha and I were talking about tokenized earnings for professional athletes, for example, but you're saying that we have to tokenize the underlying financial instruments. So, wondering what you think about that.
Yeah, no, I mean, future earnings is still it's profit sharing, so you can definitely tokenize that. You don't tokenize the athlete, you tokenize the contract establishing where the earnings are going. So that's more than doable. And weird things, yeah. So we have an open channel of obviously companies trying to come. I heard some funny ones. I also heard obviously as any startup, like people without a business plan saying, "But yeah, I want to create my token," and people will jump in. And I was like, yeah, good luck with that. I mean, if you still want to pay, I'm Shopify. I'm not going to say no.
Legit.
But we gathered some know-how and some fisheries in Chile, and it's like I don't know anything about that. Like, what do you want me to say? It's like, yeah, but we need help with this, and I was like, I mean, I eat fish. I can tell you if it's good or bad, but don't tell me about a business plan and fisheries, right? So, yeah, I mean, honestly, we have a lot of fun with some conversations that we maintain. Others are super legit. Some treasury mines, gold miners are like off the hook. They're like, yeah, I just want to tokenize my 100 million out of this mine during this Brazilian distribution. And it's like, I those numbers are just ridiculous sometimes when we hear it. And obviously, one of the weirdest organization, and letting Dima here explain, it's actually the idea that they brought in, which is utility tokens that they have for the native holders being able to convert to equity tokens. And that just opened a bunch of ideas here in Brickken, because we were always thinking about, when you pursue crowdfunding, you want like the stable coin or the euro or the dollar or whatever. But some projects out there already have a mass utility, and they're gonna play with that and then say like, you know what, I have a digital asset out there, but I want to have a new one, which is my equity. So how does it mix? And basically, it's kind of like, can I use my utility token to finance my equity? Because obviously, there's market dynamics in the back that can work. And I was like, I at the beginning I thought, no, but you want to raise in USD, right? And he's like, no, I want to raise in my tokens. So I was like, okay, let me. I need to go the weekend on my house and relax, because I think you're onto something. So when it came up to be, I was like, this is a great idea. So it was weird, but super good in the end.
Very
This is
interesting.
amazing. Yeah, you just made me realize. Well, I guess I realized it before, but didn't bring it up on this show yet. Is the challenge that really comes with creating accurate, reliable valuations for some of these businesses based on the business that they've already done so far. And so, looking at financial statements, understanding like market movements and what that could mean for the business in the next 1, 2, or 5 years. This is a huge challenge for you guys, I anticipate. But at the end of the day, I'm sure you guys are all going to become experts in startup, basically startup ninjas, pretty much, I think.
Yeah, I'm hoping there is. It's a lot of pain, but you're right. The financial valuations that help. I mean, we do have some partners who we push them for that kind of services, but in the end, all the business gets thrown to us. So we're continuously learning, because they send us all the information. We cover it obviously confidential and everything. But you're like, oh, I like this. This guys are onto something. You know, maybe I can pickpocket this and say in Brickken we can do something similar around this, because obviously we got a generator of ideas, and some of the ideas that we get here is like, wow, I think you're onto something. So it's very interesting for us, because we just get data, and the most thing valuable in this world is actually data.
Absolutely. Well, with that being said, we're going to go ahead and bring on our next guest. We are talking to the CEO of Hacken, one of the industry-leading smart contract audit firms that offer a wide list of services outside of simply smart contract auditing. We're talking about the more recent pivot into proof of reserves after a lot of controversy with FTX and exchanges in general. We're talking about tokenomics auditing, which is more and more becoming a popular practice as many startups are going to market with shaky tokenomics that can threaten their entire ecosystems. I'm going to go ahead and bring on Dima Budoran. Dima is the CEO of Hacken. How are you doing, brother?
Hello, guys. I'm doing pretty well. It's Monday in Lisbon. Nice weather. Everything's good.
I love it. This
And
one's
the
beautiful.
BTC price, of course, it's also like making me smile and happy.
You got some bags too. Well, welcome on the show. It's very, very good to have you here. And I think we're about to have some fantastic discussion. I'm sure you're going to be able to provide some very, very valuable insight into the world of security and securitization based on your experience in building this very, very impressive company. But first, I guess, Dima, go ahead and break us the big news at Hacken, why we're all here.
Okay, sure. Yeah, we team up with Edwin company with Brickken to make one experiment, and we are going to tokenize Hacken equity and basically sell it through high token. And like, why we're doing it? So like, Hacken started in 2017 as an ICO. we were Web2 cybersecurity company, and we had an idea to issue a token for bug bounty platform because we were all bug hunters. And with this deck, we went to some pitching conferences, and in one pitching conferences, we immediately won the 33 Bitcoin prize. From the stage, I got the 500K investments, and I was like, okay, yeah, we need to definitely to do this ICO, and that's how we started. And it was interesting journey. We always were taking good care about our token holders, about our community, but eventually you still have this conflict of interest that's very hard to overcome. So you have equity shareholders who basically want to company to grow, reinvest profits, building new products, and we have a lot of products. We have a lot of things where we reinvest our profits. But at the same time, community wants you to do some buyback and burns, some farming, some staking, something that basically brings them some passive income, but from the other hand, doesn't give an opportunity for business to grow. Like for me, for example, buyback and burn is the most stupid thing that you can do as the founder of the company, because if you're doing that, it means that you don't have any other good idea how to spend money rather than just to burn them. Then you're a stupid CEO, you know. So yeah, we found the like we were brainstorming a lot how we can merge the interests of both parties, and what we came up to is to tokenize 10% of the equity of Hacken, which of the main company where we have all the assets, where we gather all the profits and revenues, and to sell this 10% to 10% of the supply of Hacken token. And with the fixed rate of basically 1%, 10 million high tokens, which is fixed only in high tokens. So it brings up a lot of questions about, yeah, as you said, valuation questions, about some legal questions. Yes, there are rooms to discuss, but we believe that this is fair in the beginning. This is very fair. We are not doing anything, thanks to the structure of the company Hacken, where I have the majority, 60%. Thanks to that, I have the chance to do anything I want with my shares. So basically, I'm doing it with my 10% shareholding.
Mm-hmm.
And third, this is a big experiment, and I want to, we are in crypto because of the freedom of doing whatever we want, and I really want to execute it.
Beautiful.
I got to tell you, I love this, man. And, we, like I said before, in our journey in designing token economies, we end up coming around with some really innovative concepts when we start focusing more on business goals, company goals, and user goals. And so there's the idea of potentially a company launching a token, and that token is maybe used for a specific purpose, like growing a network of users or expanding IoT devices globally, etc. And then there might come a time where the token's purpose might not be so essential anymore. And so we released a tokenomics article a few weeks back on the idea of a Web3 exit. So an idea of how you can potentially allow your token holders to exit your economy when deciding to sunset the token. And one of the ideas was actually a token to equity conversion. And so this is something that we saw in a published paper back in 2017 or 2018. But as far as I know, you guys are trailblazing this, and with a very, very large and impressive company like Hacken. So I guess this question kind of goes back for you, Edwin. One of the issues that we saw here in incorporating these structures is the idea of creating this bridge between let's say a utility token that for all intents and purposes is maybe not considered a security, and then to equity, which can very much be considered a security. And so the idea of potentially offering these tokens only to accredited investors is maybe a solution that we had considered. But based on your experience and maybe what you guys are structuring with your token suite over at Brickken, is this a concern at all for you guys?
I mean, it should always be a concern, regardless if it's easy or not, right? Because you're talking with regulatory instruments, and the word security has been kind of like that. Don't say that out loud, or it becomes true, right? I mean, it's still the voodoo one. So, the important lies in if you want to go to certain countries, for example, United States, the regulation is more uptight. So a lot of people say like, "Hey, I'm gonna sell, but not to the United States, or I'm gonna go through the regulations." I mean, there's always a possibility for opening your channel to accredited or non-accredited, but you have to go through the procedural way. I mean, the compliance, if you're using blockchain or not blockchain, is still the same. You still have to comply with these regulations, and whether luckily there's some other countries where it's not so tight, the difference between accredited and non-accredited. In Europe, it's even been reduced because you previously needed a huge ticket, and now you have to pass through a questionnaire. So it's not like they're free in the spot, but they're understanding that the creditness and non-accredited right now, it's ridiculous. I mean, you have all these people in crypto investing 100 200k, and they're not accredited. What makes a person accredited? And it's supposed to be on how much money they make per year, and if they have a
Yeah.
validation or a master's degree. But it's still very subjective. You can have a person 18 years old, fund a unicorn, be the most rich guy, and if he's not accredited, I mean, come on, give me a break. So there's a lot of things that are right now like pushing kind of like how we understand this new like economy per se, not even a crypto economy, like the full new economy. And now the paths are becoming way more clear. So you have to always comply with the issuance or the country where you're doing it. That's regardless if it's with technology or me going to the park and having anybody sign my document or buying shares. Compliance comes first. And the important thing is when you're dealing with tokenization, it's super important to understand that what you're offering in reality is just a technology. We're not offering the funding or the methodology of compliance because that's still Web 2. So it's the comprehension of both worlds, how we offer it to our clients. Is you do have the technology which makes it simpler or easier or achievable what you want to do, but all this block, the one that we don't want to talk about, we need to sit down and talk about it because the only way that both work is by you being compliant in your issues, and then the technology, it can be simple, hard, efficient or not. But your first block, your first building block in issuing a security, funding, whatever, it's full compliance. That has to be the first conversation you need. And people don't like it. And they say, like, I'll do it my way. Then we see all the problems that happen when they do it their way.
Yeah, I agree 100%. Like I always say, it's ridiculous that we allow people to gamble, throw their life savings away on a roulette wheel or blackjack in a casino. But we have this system, this antiquated system of accredited investors. And what does that even mean? Like you said, you can invest, like you can get wrecked in the stock market. You can get wrecked anywhere. Why are we creating this unnatural roadblock so people can't invest and make money? And yeah, I guess I agree with your stance that we have to be compliant like that. That is why Sasha and I have been scared off from real world assets for the last few years. So we wanted to ask, like, this obviously has to do with where Brickken is registered. And obviously I was going to ask you, but you kind of addressed it. It goes on a case by case basis, but how do you stay compliant with the different jurisdictions? Like you said, mining companies in Chile, maybe, or depending on where and what wants to be tokenized. How do you have like a full-time legal team dealing with that?
Yeah, we have our internal team, but as said, we're tech providers. So the next layer, the service layer, we have partners. We already secure above 100 agreements with different law firms across the globe because we were not going to go country by country understanding how to be an issuance because we're very lean on tech and we have to go fast. But the regulatory one, I mean, I'm a lawyer in Europe and I'm a lawyer in Spain, but I do not know, I'm not an expert in German law. I mean, like, I cannot pretend that I am. So I cannot move fast if I'm like, but luckily there's law firms and partners above who we go and say like, hey, we're gonna do this scheme. A company might come and say like, I want to issue a token in Germany. Uh, I give them the tech, then I connect them to you. My tech complies with this A, B, C, D, E, F. But there's also manuality and procedural things that you as a law firm should help the issuer. Do you agree? They say like, I like the approach. You bring me business, I provide my expertise, and we can mix my compliance, which is like the heavy, the procedural, the agreements, all of that, and your tech provides all the KYCs, the questionnaires, the communications, the voting, all of that, and it's like we mix both things. And I mean, RWA, it's a mixed, it's real world assets, so we still have to rely on the real world things, and then the technology, the tokens. So by mixing both, we were able to do what we created here in Brickken.
Yeah, that's an interesting approach. I haven't heard that actually, and it makes sense, kind of displacing the responsibility for the token and the project amongst all the different service providers that takes to launch this asset. It doesn't. It's not just a technical asset, as you said. You need a legal team. You need other service providers to help facilitate. So I like that approach. We're still a little bit scared, but warming up to the idea, and we're seeing also the Mika comes live next year, I think in 2024.
Yeah.
So I was wondering, like, what you have any insight there as well on, because obviously staying compliant is different than being compliant from the get go, but staying compliant as things change, and we know lawmakers like to change stuff all the time. So what is like the plan to maintain compliance in the future going forward for you and all of your clients?
Yeah, so I mean, MiCA is going to regulate certain assets, but for example, securities are out of it. So we're not talking about shares, bonds, and everything. They're already on capital markets law. So what we're doing right now will not be affected by MiCA. MiCA will be affected by High token, by BKN token, by Ethereum, and all the rest of the tokens. So I think my forecast is in the next few years we're going to see a trend that is the utility token is going to be very hard to issue, especially in Europe, because you have to comply with a lot of things. So maybe they'll go for the digitized way of equity. It's like if I have to commit to something and it's equally complex, I have to make a decision where I want to go. So here it's even super interesting the use case with Hacken, because we're mixing futuristic MiCA regulation with our market law. Then we're switching that utility token of high will be transforming into equity. So this is kind of like okay, guys. A lot of people don't even understand tokenization, but now here we want to do something that it's even more innovative on tokenization and invent that utility tokens now have a real world asset utility. So that's kind of like how we see the future. It's going to be such a merge and moving around that people that enter in the space, we have to be so quick and understanding like all the possibilities of how digital assets are going to be merging and combining and making new structures that I don't even know if what's going to happen in a couple of years. But regulation will always be regulation.
Yeah, nobody knows. Yeah, it's true. We always say, like, if we could be honest about the use case for this token, most of the token economies we build or the teams that we talk to, I think they really just want to fundraise against a digital asset. They don't actually want utility. They want to they want a security without being able to call it a security. So I think we would have a lot more honest tokens and token utilities if you can differentiate. So it's an interesting point. You think there's going to be more token securities launching and less utility tokens in the future?
I think it's gonna be very interesting. But in this one, what I would like to also hear about from Dima. What I mean, he's mixing both things. On my side, as a tokenizer, I have to say like yes, I believe there's gonna be more compliant tokens. But we're also talking with Dima, who audits thousands of projects on utility, and now he's trying to merge both. So I would really love to understand also his perspective on this, if I may.
Yeah, it's interesting question. I agree with you that probably it will be super hard to prove that your token is utility token in the future, because there will be already like more clear guideline what is utility token, what is security, digital asset security. But like from our point of view, I like, Sasha, what you said about the exiting strategy. It's it might be as well a kind of exiting strategy as well, like in the way that those companies like us who has the token, you at some point, yeah, you have to make a decision. Are you supporting your community and your token, or you are building like traditional company? And we see that some of our competitors, and not only in our sub industry, that have the token, they completely abandoned the token, and they even like renamed the token. They like saying nothing about it. and for us, we just can't do it.
Yeah.
We're not. It's not. It's the wrong word. It's not in our principles to abandon it. And some of our token holders that we know each other already like 6+ years. We're already like family. Like we're friends, and we are trying to we're trying to find a way how to find a way with the new business combination how they can participate in success of the Hacken equity, because obviously it's easier to accumulate equity. It's like more predictable, you know,
Yeah.
rather than in token, which okay, maybe tomorrow we're gonna have again like farming launch pads, launch pools, and we will have some utility for our token by allowing our to participate in our clients' IDOs, but then we have another crypto winter, and so it's this rally uh, are are interesting, but they are not stably they are not stable, and the growth is does not reflect the growth of the Hacken company. Like Hacken today, we are 115 people. We worked with more than, like, I think it's easier to say with whom we didn't work in the industry.
Yeah.
Yeah, we have big corporate clients. We work with European Commission. We work with United Arabic Emirates regulator. We have long-term plans for our company, and this step that we are doing is that's in order to organically, like, to explain to everybody, like, yes, we have token, we love our token, we love our community, and yes, we have equity, and we will put most of our market capitalization into equity. And time after time, there will be such things like we are doing right now with Brickken. At some point, there's going to be a secondary market for equity, and I think right now, we don't know how it's going to be, but it's definitely planned. So yeah, we'll see.
Ooh, big words, man. I gotta say, I wanna revisit this concept of assigning adequate value to the token holder community at the same time prioritizing equity. This is a very, very big challenge in many companies that try and do it. But before we get there, I want to just sort of kind of, I guess, applaud you because you are setting a really strong precedent here when you start talking about the numbers. And if for any of our viewers, they know I'm a numbers guy. And if we talk about the numbers for 1 second, real quick, 100 million tokens being offered. At the current price, we're talking about potentially selling $3 million worth of tokens against 10% of the company. And if you look at that, that gives us pretty much a one-to-one transition of value from the token itself to a theoretical valuation of your company at $30 million. And if you think about what Hacken has done in this space so far, you think about how long you guys have been here, all of the revenue you've collected, all of the potential capital you've saved your clients, and then you start thinking about what does equity really mean? It means actual ownership of the corporate entity of the company that comes with a number of shareholder rights. And then what does the token mean? Whereas it's more of an ecosystem asset, it is something that's driven by the demand of using it within the different products, et cetera, in the company. So it seems to me like you could have gone a much greedier route and provided a much higher corporate valuation for Hacken, but you chose to kind of offer this one-to-one, which seems like a massive discount for your token holders. So walk us through that methodology really quick, if you don't mind.
Yes, I think it's not one-to-one actually, because the distributed circulation supply is around 650 million, and the remaining 350 is to be distributed, but it's going to be distributed and spent based on DAO decisions. So basically, it's like 1 to 1.5, let's say, like this, in the weights of the token holders. So the effectively the valuation is even lower. Yeah. But again, it's all about the experiment, like if the price of the token will go up, then we kind of like reached our goals. We are in this game as well. Like we
Yeah.
want our community to be um, like we want our community to be successful. So this is also about it.
Honestly, it's a beautiful experiment, and I really hope, or I wish you guys the best. And honestly, based off of these numbers, I have trouble believing that you won't meet these targets. We'll see how it goes. But anyways, I want to revisit this concept about offering both token and equity, and obviously having a long-term strategy that skews towards one or the other completely is preferable, I guess, from a company or tokenomics perspective. I think one of the most difficult things to factor in is the idea of the HDAO and the DAO that you guys have created behind this token. And so I want to kind of understand what your vision in the future of this DAO looks like. If
Mhm.
let's say you do plan on transitioning token holders over to equity, or if you plan on implementing some sort of equity buyback, or if you believe that the two can live in harmony and tandem together.
First of all, I think I do believe that like this is not the last round as what we are doing with the equity to token conversion, and I do believe that this can be kind of our uh, token public offering thing, and I think that other founders, if they want to exit, like they should do the same. So slowly we can transit, maybe not with the burn that I'm doing with the tokens, but they can at least exit their equity, get some tokens, and to to tokens basically a little bit more liquid than equity, even with our company. This first thing. Second thing is that yeah, HDAO is uh, we have quite few different communities in Hacken. We have a community of white hats within the Hacken Proof, like bug bounty platform, and we have also the community like with whom we are with the token holders. And we started like maybe 1 year ago one educational project called Trust Army, where we started to educate our community how to gather data, security data, and on-chain data of the about the crypto projects. And why we're doing this? Because there is still a lot of gray spots in crypto, and we want to fix this problem. For example, um, circulation supply of tokens, basically, which is setting up the market cap of any token. Um, CoinGecko and CoinMarketCap just ask team to submit an Excel spreadsheet, and yeah, they physically don't have enough resources, to make in-depth research and to find if this market cap circulation supply is legit or not. But in fact, if you get a little deeper and you analyze the tokenomics, PDF tokenomics of the projects and what is happening on chain and what is basically shown at CoinGecko, CoinMarketCap is so much different. But the other thing is about the security landscape, and there is a big problem right now that there are a lot of projects where they have like audited, for example, a token contract, but the DeFi like ecosystem or whatever stake and farming ecosystem is not audited, and they are showing this. Oh, we received this audit, and in fact, it's not audited. And if you go to Rex.news, you will see that most of the projects there they have which were hacked. They have the label that they were unaudited. So there's another big area where we want to make a research. By the way, another interesting fact is that 20%, we made an analysis of 2,000 top coins, and 20% of their audits, they were different from the one that were published. So there are so many
No.
so many really bad, unclear, untransparent things around all the crypto projects. And one of our main goals, yes, is to build a community that will continuously um, gather the data and make crypto a little bit more transparent. And we have this Trust Army where we educate people, and we have Ser.live, the platform where we publish this data. And there are also some important milestones that are going to be executed quite soon for these projects. But we need touchdown. We need community. We want to. Our goal is to make crypto more transparent and more fair.
Man, you guys got a tough job. But we said in one of our last, I think, eye test videos, we see a lot of companies plaster audited by Hacken, audited by Certic, etc. on their website. And it's funny. It's like, yeah, audited, but did you do anything with the audit? did you make any changes or heed their recommendations? And so you guys end up taking the blame for a lot of things that happen in this industry. Unfortunately, it's completely out of your hands. It's like, we've provided the information, you can only lead a horse to water, So I think what you guys are doing is fantastic, honestly.
Audit reports gonna evolve. So there's like, obviously you cannot call the smart contract audit an audit. It's time limited code assessment for security vulnerabilities. And the proper definition of the audit is when you review a lot of different things beside tech about the company. So about their operational security, how they manage private keys, about their treasuries, even did they still have the money they raised, about their background search and stuff like that. So I think in future audit is gonna be much more big four kind of style.
Yeah, this brings up an interesting point that I hadn't considered before. But we always think about the legal side of this, or the token economy side, because we build token economies. But I hadn't thought about this. What are your plans for auditing these tokenized assets? Because we haven't really heard much about that. So do you have some sort of deal in place? So anything that gets tokenized, you're going to audit this, or have some kind of, is that a layer of your partnership?
If the question is to me, I think it's more a legal point of view. I think it's a legal question, but definitely we would like to take part in it, because I also believe in RWA. My vision on RWA, the biggest, I want to see people to be able to convert to tokenize their assets, like their property. And I want to see some stablecoin issuer who is issuing stablecoins based on these tokenized assets. And I want to see this new huge money to be printed and to mess around our industry once again.
That scares me a little bit.
Let's go for it.
Do you guys have about, I think, Tangible? It's another RWA platform. They had a stable coin backed by real estate. I think it's RUSD, but I think it depegged and collapsed maybe a month and a half ago. So I think Sasha and I, anytime we have a client that asks us about building a stable coin, we kind of get a little bit spooked. I mean, we can do it, but I don't know. We don't have a whole lot of faith in building stable coins, and it's a little bit scary of a concept if you're not collateralizing it or backing it up with something real and tangible.
Yeah, we definitely stay away from algorithmic anything. It's got to be collateralized, and I think the industry is just a testament to that. There's just so much history behind just algorithmic stable coins being market manipulated or whatever. But I think this kind of leads into, the next discussion where I guess security and RWAs really start intersecting. So we're really fortunate to have both you guys on here. Again, Dima, thank you so much for coming on and talking about this very bold experiment that you guys are running, and Edwin for talking about the partnership and doing so. I want to talk a little bit more about RWAs now, because this is like some of the biggest stuff that's happening in this industry. And so when it comes to RWAs, I mean, like we talk about, for example, revenue generating RWAs, like rental properties or maybe a business, etc. There's got to be some intersect between off-chain data oracles or off-chain data sources and on-chain triggers and smart contracts that can execute escrow or payments, etc. What are you guys seeing in the field of development here, and more specifically along, like, let's say, accountability and regulations for a lot of this stuff?
Yes. So on that side of things, we're part of the build program of Chainlink. So we went through understanding everything that they're building, and we stumbled upon proof of reserves because proof of reserves was thought about just for exchanges, kind of like, yeah, you only have this, so you can not collateralize or do whatever. But it's like, how is that technology applied to RWA? And it's basically you can also establish that, hey, this asset was valuated by a public auditor or by independent one, and they established that the valuation currently is 1 million, so you cannot over mint 1 million. So it was like, that's super easy concept. We're kind of like just digitizing what an outside file or a public registry, or we need to find that source. It's still difficult because you have to bring the offside off chain data, which is not as pure, because if there's a movement, it automatically doesn't go. So you have to start calling. So you have to develop an API that can cause that, and then it retriggers into the chain. So it's still very much proof of concept, but at least we're understanding that there's a possibility of bridging both things. And it's because you need trust. So I cannot say like, hey, I own a house in, I live in Barcelona. I own a house in Barcelona, in Gran Via, prime spot, 3 million. I'm not the owner, and it's not worth 3 million. And we're going to see a lot of that because obviously it's scams, but it's not because of the blockchain. Like, scams are off chain, they're on the streets, they're on chain. I mean, just when there's a possibility of doing, there's bad players. So it is up to the good players to kind of like say, hey, the standardized way to do this is by using tech that is available, such as proof of research, for example, in this case, and then shooting it. So people who understand and say like, okay, it ticks all of that. So because a lot of people have that question, is like, yeah, but how do I enter into RWA, or how can I trust that you own the real estate? But it's funny in a way that a lot of people ask so many questions, but when they don't use tech, they ask zero question. And we can see it, for example, in the Star World. You're like, valuation 50 million. Okay, here's 10 million just because you're out of Stanford. And it's like, so we trust that. But then when we got on chain, it's like, oh, but I need a certificate of trust. And the auditor is like, why are we like establishing that there's so much pain in technology when in reality, due to technology, we can be more trustworthy, yes, and we can show more proof and all of that. So it's kind of like right now, I believe there's an imbalance in society where we trust more like the day-to-day manual see you in real life than what happens on chain, and we put a lot of more pain on chain. But in reality, when we all become digitized as a society, public registries have all the real estate. There's countries already playing with that, and it's like, I will never trust anything off chain. I will trust whatever it is because it's a public ledger. I mean, it's logical. And to add to the previous question, Adima, it's smart contract. It needs to be auditable. It needs to be by the book, because I mean, it's not just that you just mint the token and you let the function roll. It's, are dividends going to be distributed? Is there an escrow? Are they locked mechanic? Are they so many questions? And then people will need to understand that when they enter, they need to really see how the contract works. Maybe we need to provide them with more like assurance and facilitate the lecturer of an audited file, because I mean it's complex for me. Even I sometimes say like, okay, maybe I don't know what they say here, but that's why people I have it. But in the future, people who want to jump in, and then they should go, it's like, this works like this: A, B, C, D. Okay, I understand. I mean, so right now I believe we're in the preparatory work. We see a lot of booms happening in closed spaces, the JP Morgan upturn, the the Melon. So it's still in a very closed environment, which is a black box, which nobody knows what is happening. Because I would like to ask anybody if they've seen a transaction on public of those transactions happening.
Yeah,
I
right.
mean, it's still an S3 AWAs or something. Like, I don't know. So we still have a lot to build, but at least with these big names jumping in, technology being built, use cases like the one we're building here, I mean, it's picking up interest. And we're about to enter into a new, hopefully, phase of exposure on crypto markets, security markets. Now that after a bear market, I don't know when, but if we tick all the right boxes, I strongly believe that RWA is going to be the narrative on whatever stable coins or equity or debt or treasury bonds or whatever. But I think it's a really good use case, because for me personally, blockchain was not about like the legitimacy or the transparency, or like the like, oh yeah, I can go and look. It was always about renovating the financial instruments. I mean, it was like
Yeah.
the one thing that I've always thought, like, if blockchain works is because it's renovation of the financial instruments, the capital markets, reduction of fees, it's a pure optimization. And financial instruments, we know, like, send money right, I'm Mexican, send money right now to Mexico, the fees I pay are ridiculous. So it's like, it's not even fair.
I know what
So
you mean.
that's my thought.
It's insane.
Yeah.
I think, I mean, you guys are trailblazing, honestly. I'm really excited. There's so much that can go wrong because you're building processes. You're building this from the ground up, and you're building things that are completely untested and brand new. And so going back to this idea of tokenizing businesses, and Dima, I know that I think before starting Hacken, or way before, you had become a senior or lead consultant at one of the big four consulting firms. So you have a lot of experience that's rooted in operational management, financial management, etc. And so if we're talking about tokenizing a business, let's say a traditional business that relies on, let's say obsolete paper processes for financial reporting, etc. Like, how do you keep people accountable? How do you keep them accountable if they're beholden to a number of different token holders and they have every financial incentive to be dishonest? And so, I guess going back to what you guys are doing at Hacken with auditing, and also Edwin, what you guys are doing in tokenizing assets, like, what kind of processes are you guys envisioning that is going to involve like traditional means, like, for example, tax reporting or some of these other paper documents that can prove income or verify revenues?
To be honest, is solved issue. Like we are like a lot of revenue we receive in USDT, in other stable coins, and those revenue is being accounted by Estonian company, and Estonian legislation allows to like recognize crypto revenue. So we fixed it a couple of years ago, so it's not a problem. We have a corporate account at Coinbase, Kraken, some other ones, and they, if the Estonian like tax authorities having questions about some transactions, they go and we give them invoices, agreements, and so on.
Edwin, let's talk about the fishery in Chile, for example, which I'm sure they're not collecting stablecoin from the people that they're selling fish to, right? And so what kind of processes exist here for auditing or transparency?
So on the money flow, I think that's a very interesting question, because at the beginning when we started Brickken was 2020, so I don't even know how they did it in the past. The technology of bridging the payments of chain to one chain was non-existent. We didn't find a single provider in 2020, nor in 2021, nor in 2022. And I can tell you that this pain was ongoing, because obviously we were fully Web3, decentralized, and everybody's smart contracts, their assets, their wallets. But then it's like, yeah, but I want to do your bank transfer. So how do I do that? So we design a method of OTC and all that, but it's not clean, because people just want to do the bank transfer, and the issuer just want to say all done and the token executed and whatever. So it was not until 2023 that we started seeing the development of certain fintechs that allows us that credit card payment against the contract to get the token back, bank transfers getting sent, and we're now integrating that, because that was another point of the accountability that I believe you were saying, which is the issuer can say like, yeah, I just received off chain 1 million, and the person who sent you the money is like, oh yeah, he oversubscribed, I'm putting 100K, but maybe the guy who received the money never did off chain. So we were like trying to mimic something that is not there yet. So we started figuring out, it's like, oh, now we design all this cool platform, and now we have to go Web 2.5 to find a problem, or to find a solution to this situation. And luckily for us, we found it. But it took us years, but it was not because of us, because I'm not a developer of fintech payments. It was like some startups out there started saying like, we need to do something about it. There's a big pain. And yeah, we found a great provider, And basically, that's how we really want to digitize the whole process. Bank transfers get sent, it's digitized. The bank transfer, it's tokenized already, so it's mimicked it on chain. There's certain parameters that allows us to say like it did happen because the IBANs are controlling away and everything. Credit card payments against, and it's basically with that way we just tokenize the whole process, and everybody can see what is happening or not.
Oof, I mean, that's a big process, honestly. And again, like I said, trailblazers, this doesn't exist really. At least it doesn't exist in like tried and true methods. And so the fact that you guys are experimenting with things like this, both inside of Hacken and other tokenization projects that you guys are working with at Brickken is very brave. And honestly, you guys are testing the boundaries of what exists in the financial market. So great job. I'm really loving to see what you guys are doing. I'm very excited to see what's happening with Hacken after this offering. And so, yeah, awesome.
I got one quick question too. I think we briefly touched on it, but either one of you, what do you think about, the potential for conflict of interest here and maybe insider trading your own token? Let's say Sasha and I, we covered something earlier. We were talking about tokenization of future earnings NBA player. I don't think it ever came to fruition because the NBA tried suing this athlete that wanted to tokenize their contract. But, in theory, they could trade their own token, dump the token, buy the token before a major announcement that they can make. They have a lot of power over this. And this is part of the reason why they want to protect us from securities. At least that's what they say. So do you have any answers for that on how we could avoid this conflict of interest in the future for tokenized assets?
Interesting.
Let me give you an example real quick. So let's say somebody that is supposed to be working a job all of a sudden tweets, taking the day off, hanging out on the couch for like 7 days in a row, and then drives their own token price down to maybe scoop it up on arbitrage.
Look, I think eventually, like if you talk about inside trading, eventually we need to not allow everyone who is employed to trade without the notice. I think this is the solution like that will come in the future. But like realistically, I think we're quite far from that. It's hard to like it's easy to to abandon people from trading stocks of their own company, but how to abandon people to trade crypto of their own company, I think it's very hard, to be honest.
Yeah, I think Edwin said it earlier, like this, blockchain and transparency, it's a huge part of what we're doing in this industry, but it doesn't solve everything, but it does add another layer of protection against these things that already happen. For example, people already insider trade. Maybe it's not somebody working at a company that's insider trading, but maybe a relative or somebody in the government that might know something that other people, the general public, does not. So that's not something that Web3 can solve in itself, but I would tend to agree that transparency, retroactively being able to look back on blockchain and see, okay, this employee actually did trade the token when they were not allowed to, and this is actually a criminal offense or maybe subject to get kicked out of the company at very least.
Yeah.
Absolutely.
That's a very good point. Well, with that being said, I'd like to thank both of you guys again for coming on, having this amazing discussion. We're going to move forward in a couple of, fun little segments that we would like you to participate in. But first, Carmelo, you want to go ahead and plug us away, man?
Oh, yeah, it's my job, I guess. All right.
Oh, yeah.
Everybody like and subscribe if you enjoyed this amazing boom room and fantastic guest. And if you want to learn more about what Dima or Edwin are building with both Hacken and Brickken in all of the different subsets of Hacken, like Hacken AI and HDAO, please check the links after the show in the description, and you will be able to find all the information about what these guys are working on. We're very excited to keep following what the progress you guys are making. It's really, frankly, exciting, especially now that the bull market's looking closer than ever. So plugging away.
Big
Yeah.
All right. Well, we've got our next segment coming up by popular demand. It's actually a bit of a sad one. We're talking about something or someone in the cryptocurrency industry that is no longer here with us. And today is in memoriam for BUSD.
to get rid of their BUSD. The company announced on Thursday that it will gradually cease support for the stablecoin by February of 2024. Users will no longer be able to borrow BUSD after September 6th or withdraw Binance pegged BUSD tokens on BNB Chain, Avalanche, Polygon, Tron, and Optimism.
Flute's the best. Oh, man. It's so good. All right. So Carmelo, we've got BUSD being retired. This is some very interesting news that's coming after the most recent $4.3 billion settlement from let's see, CZ, Binance in general, and him stepping down from the company. What's going on with this? What do you know about it?
Yeah, this news broke quite a while back. But speaking of Web3 accents and regulation, BUSD is being forced to basically cease all operations. So people, if you have BUSD, I think I still have BUSD, but please get out of this. You have only a little bit longer to get out of BUSD before it's no longer a tangible asset. So I guess usually we cover hacks and exploits, but this week we couldn't find any, surprisingly, even though I think November was the biggest month for hacks and exploits in 2 years, if I'm not mistaken. Maybe that's false information, but yeah, so we don't have any hacks this week, but BUSD is no longer going to exist. So yeah.
Yeah, I think maybe this. A lot of people are suspecting that it's coming as a result of the U.S. cracking down on Binance's operations. Dima, I wanted to ask your take on some of this because there's been a lot of controversy around Binance and their proof of reserves. What's your take on BUSD being taken off of the market in about 10 days?
Yeah, so first of all, I want to share one interesting story. Last year, I attended the Satoshi Roundtable. Satoshi Roundtable is quite famous, conference happening once a year, and a lot of OG people there, a lot of famous people, crypto people, and during one of the talks, CZ was showing off that he's making more money on BUSD than on spot trading. And everybody was like, what? And the fact is that I even make a tweet. Then I had the problem because I violated Satoshi Roundtable rules. I had to delete this tweet. But in fact, just like in 1 week, maybe like 10 days, BUSD started to have problems. And so it was purely mistake of CZ, but yeah, he was too aggressive. It was like what was happening 1 year ago. So you deposit USDC on Binance, and it's immediately converted to BUSD. Basically, he is taking your USDC and making yield from non-risk derivatives. So yeah, I mean, he tried to take advantage out of his big reserves, but in fact, he made a mistake. It was a very bad idea to tell among so many like wealthy people that you're making more money on BUSD than on spot trading of Binance. But if we go back to proof of reserve, all of the proof of reserves of the exchanges are still very far away from proper assurance that that they have enough funds. Because like what we are having right now, we have the Merkle tree computation of some of the liabilities. Yes, like people can go and check that their balances are included into the liabilities list, which is a little bit less than asset list. but we don't know if they have some huge corporate deals, some huge corporate loans, and we just don't know them because no one is doing a proper audit of the completeness of the liabilities that they are showing to the public. So this is one question. Second question is that there is no doubt that there are like second tier and especially third tier exchanges that they don't operate their own liquidity, that they are sending user funds to other exchanges or like doing some other settlements, and they are using other big exchanges liquidity to trade. And this is uh, in reality, this could be okay, if exchanges disclose and they like will tell to the crowd that we are not a cryptocurrency exchange, we are cryptocurrency broker. But we just don't. This is not a trend right now. So coming back to proof of reserve, I will not be surprised if you see some other sad insolvency disclosures of very big players.
I gotta tell you, man, I think you blew a lot of people's minds, and I don't know what's more shocking to me, the fact that they're making more money on BUSD potentially arbitrage conversions and transaction fees than spot trading, or the fact that no one invited me to the crypto Illuminati. So these are both very upsetting things. But going back to the idea of proof of reserves, yeah, I completely agree. I guarantee that there are many tier 3 exchanges that are completely misappropriating funds. And this is just a disclaimer for all of our users and who is watching here. The common trope stands true, right? Not your keys, not your crypto. So if you're storing funds on exchanges, you have to understand that's an additional risk that you must be willing to take on, especially if you're talking about exchanges that might offer, I'm just going to go ahead and name some, Carmelo, should we name some red flags? 100x leverage trading. So be careful what you guys are doing out there. Oh my goodness.
Yeah, and it's not just tier 3 exchanges, tier 1 exchanges. FTX was a tier 1 exchange, and look what happened there. Binance also had some issues before, so I think it's not limited to just the tier 3 exchanges, tier 2.
Absolutely. Well, Dima, thank you so much for your valuable insight there. We're going to go ahead and wrap up this episode with our final segment, Bullish. Again, I'd like to thank you guys for coming on and having this amazing discussion. We're going to talk a little bit about markets and what we're optimistic about. Do you guys really believe the bull market is here? Dima, I'm assuming you're looking at Bitcoin price this entire time that we've been talking.
I don't think we're in bull market yet, to be honest. Like, what is the bull market? Like, what is let's call it altcoin season. Yeah, we're more interested about altcoin season. What is altcoin season? Altcoin season is when the wealth from the BTC, the profits from the BTC rise are moving into the like altcoins. And I think all the whales that have all the whales are basically right now in Ether and BTC, and they are not fixing their profits at these levels. So I think they will wait until Ether at least like 3 something, BTC at least 60 something, and then they will start to fix the profits, and then they will start to reinvest in them into altcoins, and then we're gonna see the altcoin season. So my approximation, okay, it's starting, but not in the way that we remember 2021.
I hope so. I like this. I like this bullishness on altcoin season because, again, when it comes to altcoin season, that's typically when we start to see a lot more exciting projects coming to market that might need some form of guidance or token economy design work and trying to make sure that they stay sustainable and scalable as far as their business models. Edwin, how do you feel about this current market?
No, I'm gonna follow Dimas and say it's alt season. We should all start looking into alt season. I mean, I haven't seen the sentiment yet, or what is the capitalization of Bitcoin against altcoins? I don't know. What are we, above 50? I don't know yet where we are.
That's a good
but
question. But total market cap at
forgot-
1.6 trillion, I think.
I think
So,
Bitcoin just hit 800
right?
million.
I mean, the sentiment for I'm going to explain it more from a business perspective, not to try to give financial advice. But on our sector, tokenization, on the bear market, it hit us big time. Because when we were pushing the idea, we had a lot of interest. And then they started assimilating that what we're doing was the issuance of cryptocurrencies. So it was not, but then education need to happen. Past summer, we've grown a lot. So I mean, regardless if we say that we're doing something different, the technology is dragging us still in. So we do see the sentiment from certain people saying, "Oh yeah, look at the market again. How's tokenization doing?" I'm like, "We're doing perfect now." I mean, if you want to simulate me how to play your game, I mean, even though I'm different, but we've seen that there's more positiveness and there's people now trying to like test this kind of like the tokenization of things. So I do not know if we're in the bull market anytime soon, but I have personally seen that the sentiment has changed just because I've come from that world where bear market hit and my email just went blank. Like literally, there were so many deals on board, and they were like, "No, but the market is like, no way, but we're doing shares to equity or that." But it's like, yeah, but cryptocurrencies, no. And then suddenly now it's like, "Hey, man, a long time to see. It's been 2 years." I'm like, now you want to talk? It's like, okay, okay, let's call each other friends, but at least you owe me a beer, man. It's been 2 years. But yeah, so that's my
Cold call
conclusion.
emails.
Yeah.
That's bull market, cold call emails. Here we go. Well, I love it.
So-
It's a good take. Well, we're gonna go ahead and wrap this thing up. We've got our last segment, bullish. I want to ask each and every one of you guys, including myself, what you are bullish on this week. The only rules is there's only one rule. It's quite simple. You cannot be bullish on your own company. You have to be bullish on something else. So
Or industry.
we'll go ahead. Carmelo, do you want to start and give these guys a little bit of time to think? I see they've got they're thinking like looking up and to the right.
Oh man, I did not expect to be first. All right, I'm gonna go the boring route and say like Web3 gaming is gonna make a big comeback, and I'm seeing the quality of gamings go up. I'm seeing a lot of game studios launching. So we built a couple game token economies that I'm excited to see finally debut, and they're raising funds right now. So I think AAA gaming is going to come to crypto, and it's not going to be the defining narrative. Like I think RWAs and tokenization are going to be probably the biggest story in DAO. But yeah, Web3 gaming I'm bullish on. As far as actual game, I'm bullish on nothing in particular. I've seen some really cool ones launching. I think like Gunzilla looks pretty cool. Nice token economy.
Our friends.
Shrapnel.
Nice. And customer, hopefully.
But yeah, actually, here's the perfect time to say that we're not affiliated in any way with either Brickken, Hacken, Gunzilla, or anything. We're not shilling anybody. We're totally transparent here. Unfortunately, we didn't invest in Brickken. Now we're beating ourselves up for it. But yeah.
Okay, we'll get some NFTs at some point, I'm sure. It's a hot bull market commodity. Speaking of gaming and Web3 gaming, I'm going to go ahead and chill us a little bit more. If you guys are interested in meeting Arcanum Ventures, we're going to be at the World Blockchain Summit in Bangkok in just a couple of weeks, speaking on a panel about Web3 gaming and GameFi. And so come and find us. We're going to have some cool swag for all of you. All right. Dima, what are you bullish on, sir?
I would say Uniswap probably. I think Uniswap, like as a pioneer of DEXs and decentralized of finance, basically, will have some surprises to propose to our industry. And like their code is always like the best code in the industry, like the perfect code. and I think they have the room to grow. So I would say Uniswap to watch them.
Solid answer. I like it.
Yeah, that's a lot of know-how answer. I'm gonna have to follow that because they're gonna try to do KYCs, liquidity pools, and for the RWA sector, that could be an interest for secondary markets because we have a huge pain in not having kind of like that easiness to create liquidity or whatnot. But if Uniswap, not everything, please don't. Hopefully, Uniswap doesn't go like only KYCs. I don't think they would. But if certain pools could be created against KYC or in a certain way, I think so. And following your lead, I also gaming. Yeah, everywhere you cannot be bullish not on gaming. I mean, we're seeing now better games, not just the ones that is just one click and we figure it does something and then just recover energy.
Yeah.
I downloaded myself a game. Okay, I'm not. It's not Chile. I'm not associated. Cyber Titans, and I
Oh
was
yeah.
like, oh, okay. Uh, this is interesting. We're getting now good quality. So I mean, I'm a gamer. Like I
Nice.
really like to chill and watch my games, but some of the Web3 games that I tried in the past were like, this is not gaming. This is just something else. They're trying to trick me. So now we see it, and I think we're gonna see way better. And the final shield, I'm studying a lot on ordinals in Bitcoin. I
Hmm.
find it very interesting. I'm not like a Bitcoin infrastructure fanatic, but I see that building on something that is so valuable. I mean, it's needed, right? I mean, what is the use case without being a store of value? There has to be something more that it can be done. So I'm going through understanding what they're doing there, and I'm liking it. I mean, very early, but I gotta say, there's something there, definitely.
Yeah,
I
the
like that.
Taproot Wizard of them. Wizards. I think they just raised like $7.5 million. Yeah, we have to
We
have
got
maybe a gaming stream sometime soon with some of our friends because we've been meaning
yeah.
to try out some of the games from people that apply projects that apply to us for advisory or for token economy builds, and they have solid games and nice fun way to show off some what people are building out there because there's a lot of good teams that are building some impressive stuff that they bootstrapped without funding. Actually, we've seen a few, so maybe possible series to come in the future.
Yeah, both of you guys are welcome back to hang out and play some games for sure. I completely agree with both of your sentiment around Uniswap. I always say the AMM that was pioneered by Uniswap is one of the greatest innovations in tech. And it is, it's not perfect, but it's pretty damn good. And it solves a lot of problems. And so, we mention the AMM, these governing equations behind it, et cetera, in a lot of our different documentation articles, because it is a massive step. Most people don't really understand or know what that is. So Uniswap really, really nailed it here and innovated this entire industry. I guess I was gonna say chain GPT pad, but it seems like kind of a low hanging fruit compared to all you guys. Anyways, if you guys have seen any of our 10-minute eye tests, chain GPT has been quite true to their mission in bringing a lot of different AI based companies to market. Although we haven't seen a whole lot of development outside of just the launchpad, I'm bullish to see what they're going to do there, because if they have any sort of revenue generating structure for their launchpad business model, they should be doing pretty well. And they seem to be the premier launchpad in the space. So again, we're not affiliated with Chain GPT Pad. We know those guys. I just think they're doing good, and they're launching what seems to be the most promising Web3 startups so far. So good for them. All right.
Bullish on
With
launchpads.
that being said, what's up?
You're bullish on launchpads.
I know no one expected that, really. I'm usually very critical about launchpads.
Yeah, that was a
Well,
twist.
again, one last hoorah. Dima, thank you so much for coming on and talking about tokenizing Hacken, this amazing experiment that you guys have embarked on. I wish you guys the best of luck. Edwin, thank you so much for coming on and talking about tokenization of small businesses, real estate, etc. It's been fantastic picking your brains about these concepts. I'm sure our viewers have learned so much talking about this because these discussions have been very in-depth. So again, we appreciate you guys very much. We wish you the best of luck, and You're always welcome back.
Yeah,
Thank
please
you.
come back.
It's been amazing. Thank you very much, guys.
Thank you.
All right,
you,
guys.
guys.
Take care. For all of our
Bye-bye.
followers, again, make sure you like and throw us a subscribe if this content interests you. We got more boom rooms coming. We got more on-chain data analytics and more 10-minute investor eye tests. Thank you as always. Carmelo and Sasha signing off. Ciao, y'all. Boom room.